Well, the big winner from the Fed's discount rate move so far, the U.S. dollar. Sara Eisen's been tracking developments in currency markets for us.
It's been very exciting, Mike. Euro dollar broke 135 yesterday. That's huge. It's euro weakness, dollar strength. That's the name of the game. And for a change, this is a dollar story. You know, in the past few weeks, it has been a weak euro story. Now we have a strong dollar story. Now that the Fed has made a move to increase one of those emergency lending rates, very, very bullish for the dollar. It's been rising ever since. We saw a spike yesterday when the move happened, and it is building on those gains this morning, although not as strong as what we had seen yesterday.
Not exactly a rush for safety, though.
Part of the story is a rush for safety, and the idea there is that the Fed is going to wean the market off of some of these emergency stimulus measures, and that means easy money is coming to an end. That causes a little bit of a rush for safety, but it's more about what the actual move means, and that is taking those dollars, those extra dollars out of the system here, increases the value of the dollar. Fewer dollars in the system makes the dollar worth more. So that's why you see this bullish move. It also raises expectations that the Fed is going to make a move on its main interest rate sooner rather than later. And we know that, of course, is very bullish for the dollar because it increases the yield, makes the dollar a more attractive bet.
And at this point, the dollar already on an uptrend, likely to continue?
Dollar on an uptrend thanks to the euro's loss is about 10% higher since November. That is a very strong move. And some were saying that was looking too far too fast. This may be a game changer, I'm hearing, because now the dollar is rallying on its own merit. And that is, it's very attractive to buy the dollar with the Fed making moves, with the Fed talking about exit strategies. You know, lately we have seen Greek officials and some of the Greek newspapers blaming speculative traders and hedge funds, including Paulson and company, for some of these sharp moves in the market, including the tumbling euro. They can't blame the hedge funds today. They'll have to blame the Fed. So you can see very much the dollar is now not just not the euro, but it's also rallying on its own accord.
So what are strategists saying we should do? Sell euro dollar?
The play here is to buy dollar yen. Euro dollar has already moved very far, very fast. Dollar yen has a lot of catching up to do, and this is the pair that's very sensitive to interest rate expectations. So bullish bets on the Fed, bullish bets on the economy should all play out in dollar yen. So BNP Paribas and other strategists have come out this morning saying buy dollar yen. That's the way to go.